Good day, ladies and gentlemen, and welcome to the show. On this Friday, the 19th of February, 2021. Thank you for tuning in. You know what? In Texas, we've got millions of people who've just went out through a huge power shortage and everything. I think they'll get the power back on, yeah. But they're sending out these bills, and there's going to be sticker shock when people see these bills. Can you imagine, say, every month you've been paying like $100 a month for your electrical power, and all of a sudden they send you like a $3,400 bill for this month? And there's going to be millions of people going to be seeing sticker shock when they see the bill for the... This is arbitrary. They can just send you any bill they want, but they're going to be sending these bills out. Now I'm going to tell you what. Even if they do change it, and they don't make the people pay the huge bill, and they settle it somehow. I don't know how they'd settle it. Maybe they'll say, oh, they go back to the way they were doing it. Still, that sticker shock's going to have an effect upon millions of people that receive these crazy big bills in Texas. We're talking 4 million people are affected, you know. So let's say that's like over 1 million households. And people in other states are going to see what happened, too. They're going to say, hey, what if my power company does that to me? You know, all through the southeastern United States, where hundreds of millions of people live, will see that and say, hey, you know what if my power company does it? First thing they're going to do, I mean, a logical person, the first thing they're going to do is start to think about alternatives. They're going to think, hey, you know, if that can happen in Texas, it can happen to me here. Honey, let's Martha hand me that internet. I want to take a look on your laptop and go to Amazon. It goes to Amazon. You know what he's going to be looking for? He's going to be looking for power inverters. He's going to be looking for solar panels, generators, right? Maybe heaters. This is the things they're going to be looking for on Amazon, right? Meanwhile, what does it take to produce a solar panel? Silver. It takes silver to produce a solar panel, right? So these solar panel producers are suddenly going to find themselves, millions of people saying, hey, you know, I need an alternative power source. Because, hey, the power company's going to give me these arbitrary, monstrous-sized bills for, you know? And you're going to see a wipeout, you know, going to see massive sales of solar panels because people are going to be saying, hey, you know, I got to get off. I got to get off of this grid, or at least have an alternative. They're going to send me a $3,400 bill every month. I can't pay that. Heck, Martha, you know, I could put in my whole solar system. Look at the prices here on eBay. I could put in a whole solar system for $3,400, and that's what they're going to charge me for 1 month? You know? It's way cheaper to produce power myself. And, you know, I got a little spot in the backyard. I can put them on top of my shed back there. I got a little steel shed I bought at Walmart last year. I'll put the panels on top of the roof and put the batteries inside and run a power cord up here to the house, and we'll have power, you know? And it's only going to cost me $4,800. That's only what they're going to charge me for 1 month here in Texas on my power bill. And I'll have power forever. And, you know, Martha says, that's a great deal. Let's do it. So they go to order the solar panels, and they find out they can't get any. Everybody else has been ahead of them. So solar panel company, you know, they say, okay, we got to produce way more solar panels because everybody in Texas wants solar panels. Everybody in the Southeast wants solar panels. And so they start pumping the solar panels into eBay, but then they run out of silver. And where are we going to get silver? I don't know. It's all gone. You know, we're going to see commodity prices are skyrocketing. You know, and Bitcoin, the cryptocurrencies, are commodity. Listen, guys, I'll tell you ultimately what's happening is the system's starting to break apart. COVID-19 starting to make the system break apart. And we're getting anomalies within the system now that are going to grow. And one of the anomalies is the impact it's having on all the commodity prices across the board. Uh, and, this is going to continue. Now, the yield curve's starting to move out of control, and the long end of the yield curve, tell you what to watch for next, and what's coming next is what's called yield curve control. And this is where we're moving. Let's get started, and let's open up the charts right here and take a look at what's going on. Now, we see the silver price going up today, 42 cents so far today. It looks like it's stabilized now in around 27.40. So the price is 27.41 on silver. Let's take a look at gold and see what gold's doing. Gold is shooting up a little bit, $9.60 today, 17.84 for gold. I'm going to tell you, gold and silver are two completely different animals. A lot of you guys that don't know it out there, they've been saving gold all the way through history. Yes, coming out of the ground, it comes out at a ratio about 9 to 1. So there's 9 times more silver comes out of the ground than gold. But they don't really use gold for much of anything. Make jewelry with it, and they store it in vaults. Gold can serve the same function in electrical components as silver, but massive amounts of gold have been stored away for thousands of years, and so there's actually more gold in inventories, or just as much gold as there is silver out there, But silver, see, the reason why is because they take the silver and they use it. They use it to make electronics. They use it to make. They use it in the photo industry. They use it even in making your clothes. And they consume it, and it's all gone. And they've been doing that for a very long time now with silver, and it's increasing. All these factories, like your iPhone. You want a new iPhone? Silver in it. They can't make it without silver. Just like the solar panels. There's going to be tremendous demand for solar panels. With these arbitrary price gouging done by the electrical companies. I mean, they don't even have to follow through on that when they send people like a $3,500 bill in Texas. Say they go back and say, okay, well, we're not going to do that. We're going to make your bill normalize. Well, the damage is already done. As soon as that guy gets a $3,500 bill for 1 month of power use, and he says, I didn't use that much, he's going to say, I'm going to put in solar. And we're already moving in that direction, and solar takes an awful lot of silver. It's going to take an awful lot more, but where are they going to get it? Because everybody's hungry for it. We got investors out there by the thousands all across America buying all the coin and bar demand they can get. They can't get any. But it's on back order. It's sold already. They want it. Everybody wants it. So we're in a silver crunch right now. We haven't seen, I'm telling you, they've been suppressing the price with silver, but for these guys like on Reddit, they say, hey, the Reddit guys, we're going to crush the silver, the big shorts in silver, the big bullion banks. We're going to crush them. We're going to do this and we're going to do that. Well, no, you're not going to crush them. I'm going to tell you why, because they deal only in paper. They can make as much silver as they want. All they do is just start up the printing press and make all these silver short, these futures contracts, these SLVs. They can make as many of them as they want. It's all just a bunch of paper. You spit out as much paper as they want. So that controls one side of the market right there, the spitting out and making more and more of this paper silver. And the other side of this market is the people who are trading in this, the big bullion banks. So they're trading in it, right? And this is like an encapsulated, it's not have any connection at all to the real silver, real physical silver. No connection. So they can have a silver shortage and still keep the price down, because one side is dealing in paper and they're selling, if people come in and they want delivery, well, the COMEX is just going to throw their hands up and say, okay, we're going to settle in paper. So on one side, they got a printing press, and they can create as much of this paper dollars as they want to settle the silver contracts. On the other side, they got a print and press that they can create the silver SLV as much as they want, and they can just move all that to one side. What's that got to do with the real price of real physical silver, which is in a shortage right now? Well, the answer is nothing. So they can keep this game going because it's all paper. On one side, it's dollars that's used to settle the contracts, and on the other side, it's the contracts that they can print to infinity. And so they can just keep this game going and this spot price going for silver indefinitely, even though there's no silver to be had. But here's the caveat. The caveat is real physical silver, go out and try to buy some. So what's going to happen? You're going to see the premium go up higher and higher. And the price of real silver, real physical silver, is going to in no way reflect upon the spot price. The spot price in the end is going to be nothing more than a joke. Okay, I'll explain it to you this way. You go out, if you can get a piece of real silver, you might in the end see a $200 premium on it. Right? There's your, and still the spot price is $26, but you're paying $250 an ounce if you really buy the real thing. That's the way we're going with this stupid thing. Everything's gone stupid. That's why the system is fragmenting. I can't begin to say it any other way. We're heading toward a crisis, but we've got these anomalies within the system. Cryptocurrency today. This is one of the bigger anomalies. It's moved to 1637. Let me just refresh the page. 1641. See, I just refreshed the page about 30 seconds ago, and it's went up from 1637 to 1641. Those are billions, by the way. 1,641 billion in the industry. That's 1,641 billion. What do you think's happening here? It's becoming too big to fail. Very rapidly. Bitcoin itself is almost $1 trillion. When you start moving into the multiple trillions, any industry, it doesn't matter what it is, if it fails, it's going to take the whole financial system down. And then it becomes untouchable. I think that people like Elon Musk, that's buying into cryptocurrencies, are saying to themselves, hey, we're almost to that threshold. A little bit further, and suddenly it becomes too big to fail, and then the central banks can't touch it for fear that it'll take the financial system down because it's so big. And that's what's happening in crypto. It's getting almost there. It gets up around 3 trillion. 2 or 3 trillion. Right now it's 1.6. It's over. They can't touch it. The central banks can't go out and ban it anymore. Because if they banned it, the whole financial system will go down. Just like all these other things that they can't take down. They have to keep them going. Things like Deutsche Bank, and it's going crazy. The whole thing's going crazy. I can't put any other words to describe it, but Bitcoin just keeps marching up. Now it's $52,900, almost $53,000 per coin. But this might be the floor. This still might be early adopter phase compared to where it's going. And markets aren't normal. Normally, when you see a market go up higher and higher and higher and higher, you expect a sell-off. You expect a fall. But now we're in this topsy-turvy world where that's not necessarily the case. Things can go up forever because we're entering into a hyperinflationary. And what you're seeing is the dollar reflected in these markets for things like Bitcoin. You're seeing the loss of purchasing power in your dollars, reflected in things like these bills that they're sending out for like $3,200 for 1 month of power. To an ordinary person has an ordinary house. Everything's topsy-turvy, but to say Bitcoin's going to go down now because it's in a bubble, it might just be on the floor, a ground floor. Getting ready to take off to something even bigger, 250,000, 500,000 per coin. And, you know, gold and silver are ready to explode. But it's going to be not in the spot price. It's going to be reflected in the premiums you're going to have to pay. They're going to keep exploding higher premiums, and I think there's going to be an explosion in the price of premiums on the gold and silver. Uh, this is why I've been telling you guys for a long time now. Don't buy SLV if you want to buy silver, because the SLV is just a bunch of paper, and they can manipulate the price. 31,000 on the Dow, 31,587, and it's up 94 points today. And this is another one of these things that can keep going up, as long as they keep pumping that money out there. Crude oil today, $60.19. So it's holding above 60. It's down 33 cents on the day. Now the MOVE index. We're seeing an uptick in the MOVE index. And, you know, for a long time, went along flat around 46. Now it's 56. And now it's going along flat at 56. I'm telling you, it hits 75. And they'll have to do something. What it basically means is we're heading back. Now that it's moved up 10 more points, the MOVE index, it's showing signs that we're heading back toward the crisis that started when all this was starting, called the repo crisis. We're heading back toward another a credit insolvency crisis. The fact that the MOVE index is, that's what it's telling me. I'm reading the signals because it's moved up 10 points and it's still moving up right now. This MOVE index means that we're heading back towards some sort of a problem within the credit markets, like the repo type problems. This is my sensitive meter that tells me that, right? And so there could be some sort of a problem right now within the credit market, they might have to do more repo stuff, you know. Bonds and rates today. And now here's another problem right here. And this is a huge problem. We're seeing these long end of the yield curve day after day now. We're seeing it start to creep up. We're looking at a 10-year at 1.33, and we're looking at a 30-year 2.12. And they're moving up, and it's not insignificant today either. We're moving up 4.9 basis points on the 10-year and 5 basis points on the US 30-year. They will not let this continue, because this will shatter the system. It'll shatter the fragile system that they're trying to hold together. And so they meaning the central bank, will not let this continue. But they don't want to do the medicine that you need to do to stop it either, because they know that'll send cryptocurrency to the moon. That'll send gold to the moon, silver to the moon, if they do what they need to do to stop this. So they're holding back. They're sitting there holding back, hoping something will happen. Hope beyond hope that the dam won't break. And they're sitting there holding back, and they're frightful right now because they don't want to do yield curve control, because they know what'll happen. The gold and silver will pop, and price will go way up. And so they're just hoping that this will stop. That somebody will buy their treasuries. Anybody will buy their treasuries. This is what they're hoping, and that they'll get these yields down again, you know, on the long end, but without doing yield curve control. But it ain't going to happen. Who's going to buy a U.S. 30-year bond and only get 2% interest when inflation's probably eating away 5% or 10% of the value, the purchasing power? That's a negative yield. That means you're losing money. It's a losing proposition. And these same guys that would buy a 30-year bond now are eyeing up Bitcoin. Because that way they can make a lot more interest. No, nobody wants to lose money on their savings. And so nobody's buying them, and the price is going up, and the Fed's going to have to step in and buy them themselves. And they're going to. That's direct. They're directly monetizing everything now. What's happening is we are moving toward a command economy. I'm not moving toward it. We are already in it. A command economy. The problem is, you know, if you go over to China, they got a command economy. But the thing is they've let the little guy, the entrepreneur, the smaller guy that wants to start a business or whatever. They've let them. They don't put too many restrictions in. All the and the big guys, the real big conglomerates in China, well, they're connected right into the government. They're controlled by the government. So they have a command economy over there. But we're trying to do the command economy thing, a centrally controlled, completely controlled economy within the United States of America with no capitalism, with no insight. We're destroying all of our small entrepreneurs and small businesses all across America. Absolutely destroyed. The system's coming unglued. It's starting to come apart at the seams. It's going to be some sort of a major sea change in the whole thing. And that changes of that magnitude don't come without tremendous upheaval. So that's what we're looking at, tremendous upheaval. And, there's casualties always when you have tremendous upheaval. And this is the way things go. I mean, U.S. dollar index today. We're looking at 90.33. It took a big swoop this morning. Overall, over the day, it is down some. It's down 0.26, or down 26 cents, down 29.29%, or 1/3 of a percent. It's down 93.3 this morning. Thank you guys for listening to my show. Like and subscribe. Ring that notification bell and everything else, and we'll catch you guys in the very next episode. Bye-bye.